What's up, guys? In this video, I want to be teaching you about advanced market structure, how to apply it to your trading to have not only better results, but a better understanding of the market. The more you can understand what the market is saying to you via market structure is going to only increase your profits and your mental capital as well. Because if you don't understand what the market's doing, that is going to stress you out way more, right? So let's go ahead and get started here. I'm currently in a short position. When and how will I know when to exit this trade? We look at the market structure from a point of view of simplicity. We can say that this here is a higher high, and then we can clone this and say that this was a higher high as well. But at what point do we start seeing lower highs? Well, we cannot say that there's a lower high until we see a lower low. So you must see a lower low before you can count a lower high. Hopefully that makes sense to you. If you're looking at the market like this, the price goes up, it comes down, it comes up again. That is technically a higher high. But what if you have a move down and move up, and then it goes like this? So this here is considered a lower high, but I would not consider it a true lower high until I had first seen a lower low being created in, and only then would I count it as a lower high. So if we look at price right here from the opposite perspective as a down move that's taking place, we can say that this here is your first lower high because it took out the low right there. So at this point, you have your first lower high. You notice that this is probably the best low risk entry of price as well. Now you really take a look at this. Where else could you have had a entry that was as clean as this one, offering lower risk? Possibly right here, but you would have got stopped out right there. So let's go ahead and look at the short side of this here. So we're going to, instead of lower, we're going to be looking at lower lows. So lower low, we have a higher low right here, right? But it did not make it close above a higher high. So it's not technically a lower high yet. So we'll say the lower low. We would just not even count that one. That is not a change in delivery right there. So you have a lower low here, and you have another one here, and another one right here. And then we had a high right here. This is also a higher high, but we did not get a lower high right after it. So you need to see for a true change of the market structure. If you were looking as price is going down here, when do we need to consider getting out? We need to consider getting out when we see a higher high followed by a higher low. So we have a higher high that happens right here, which then follows with a higher low. So that would be a good opportunity to enter into the market. So you see here we have a higher low, higher high taking place, but will we see a retracement that is going to give that lower high? So if something like this occurs, yeah, then I would exit my position here. And this is because of the fractal nature of the market. The market is fractal, meaning something that happens on one time frame can be taking place on a lower time frame at the same time. And you could see different um, market structure on different time frames. That's why it's fractal. So if I go to a 10-second here, you can see that price started making higher highs right here with lower highs. On this time frame, the market has flipped bullish. But if we go back to a 10-minute, the market is very much still bearish, right? We're having lower lows and no higher highs yet. For the actual change in the market to take place, that's why you need to see the shift, right? So a market structure shift technically would be a higher high taking place, but I would not count that as a shift in structure or anything else in that other than probably just a double tap fake out. I often enter in and add on to these double taps, knowing that I'm at least going to get that retracement back down. That's going to create the lower high here, or higher low. So let's take a look and see what's happening right here. So now we had a higher high that took place, but now will we see a higher low take place as well? Will price come down, put in a low, and then take this high? If it takes this high, that is your complete change. If it takes this high out, then it's definitely going up. So if you understand this about price, you can really, really, really take your trading to another level. Without it, you can still use the basic higher highs and lower lows, but you're going to get faked out often and repeatedly faked out and taken through a loop. So let's just go over this one more time. So if we have a downtrend that is taking place and we're seeing lower highs and lower lows, when can we start to determine that the trend is changing, that it is probably no longer going to keep going down? Once we see a higher high followed by a higher low that then takes out this high. So you need to see this, then followed by this, then followed by that. And as you see here, price is continuing downward. It has not formed a low that is going to make me think that it's likely to take out the upside price action. We had a higher high, but we have our lower low here. So until this new higher high gets taken out, we are to remain short. You can drop down to lower time frames to kind of get a look at what's actually taking place, because you can sometimes catch the change that's taking place in the market structure on a lower time frame. So on the 30-second, we had a higher high. No, it's actually the same still. It hasn't changed. Then you can use intermediate term highs, intermediate term lows, those kind of things as well on top of that. I personally don't really use them anymore, but you could. I mean, there's no reason why you couldn't look at that understanding of price either. So just remember, you have your right here, double tap, because it took out that high right there. And these are going to occur on NASDAQ frequently. I see them all the time. Like today, if you used my market structure rules, you would have known to stay in this trade all day. You would have never once been faked out. You would not have gotten out of this trade until right in here as this low was broken here. Because if we look right here, let's go through the market structure here. So price is making lower highs with lower lows. So right here, we have our first higher high forming. So that's step one. We see step one taking place. We have our first higher low taking place. So now what do we need to see here? We need to see price continue up here without making a new lower low. So right here, you see it. Right here, it's happening. So this would be your buy signal. You can now officially go long and understand that price is going to continue for some time. How long? It all depends on the nature of the market that you're trading. In this situation, it went on indefinitely all day. But you see here on this move up, we had no change. There's nothing that's changed here. We have a higher high, higher high, higher low, higher low, higher high, higher low. People will be like, this is a flip. It's changed. That was the low there, but no, that's not a low. You have a higher high, lower low, higher high, lower high, higher low. It's just returning back to that previous higher high. Price never got below this low. You see that? It never went below until it was actually ready to change. So right here is where price has changed, right? Because it's making higher lows, higher lows. We have our first break of our higher low here. So now to really get bearish with it, we would need to see a lower high form that then breaks this lower low. But at this point, you could have went ahead and went with it, because it not only broke the lower low, but it also created a higher low here. So if you would have gotten a higher high here and then it broke this, that would not have been credible to me. I would need to see it break that new lower low forms. Just for an example, let's say price went up, created a new higher high here. Now I would need to see price not only break this, but create a new low right here and then break that. And then I would know that the market's for certain going down. Yes, you're going to give up some points if you're using only this, but the way I trade, I do not only use this, right? This is not my only way of looking at price. Many different other ways I'm looking at price here. So back to the live market example here. Nothing has changed, right? Until this high gets broken, I'm to remain bullish. Lower low, higher high, but no higher low has been broken yet. No higher high has been broken. Hopefully that makes sense to you guys, and I hope this helps you in your trading. If you're interested in getting funded, make sure you check out my website, verifiedfundingcompanies.com. I have the best trader funding discounts in the game with companies that you can actually trust. I guarantee they pay you out. So therefore, you should know that any company that I list on my website is trustable and going to pay you out. And if they don't, I got you. So definitely check that out. I also have a Discord. You guys should definitely check out. We are live streaming every single day. We go in depth into price. We predict the next day's price. We trade Asia session. So let's say you have a job and you're trying to quit your job, but you work during the day. So how are you going to trade New York session responsibly? You can't. I found that Asia session is very much tradable and I figured out how to trade it. So if you want to learn how to trade it, definitely check out my Discord. I will leave the link to the Discord and my website in the comment or in the description. And I will catch you guys in the charts.